I know everybody's sick of it, so I'm gonna try to get through an entire video without mentioning GameStop. That's it. One time, that's all I'm gonna say it. We're gonna try to cover the news without covering the biggest news story of the week. Hey everybody, Walrus here from Walrus Street. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. Wow, what a week. Most of the markets finished negative on the month of January. Kind of a crazy month. We had some ups and downs, a lot of red closes. There was some shady stuff happening towards the end of the week, but I'm not really gonna talk about it too much in this video. I will address some news, some updates with Robinhood at the end. But for now, let's get started with the news for the week of February 1st, 2021. Just a reminder for anybody who's new to the channel, every single week I do publish my technical analysis. It's going to be in a link below the video. Executive order on tackling the climate crisis at home and abroad. This is from the White House, whitehouse.gov. This was a huge story this week, and because of everything else that's happening with the G word, this really just didn't get covered on the news. This is kind of groundbreaking because it's showing how the government is going to be allocating a lot of its cash for the next 4 years. A couple of things really stood out for me. This is a pretty long press release. The first one, there are opportunities to create well-paying union jobs to build a modern and sustainable infrastructure, deliver an equitable clean energy future, and put the United States on a path to achieve net zero emissions economy-wide by no later than 2050. So this is incredibly ambitious, but one of the goals of this administration is going to be to spend the next almost 30 years making the American economy net zero emissions. Can we do it? Probably not. Are we gonna try? Yep. The other thing that jumped out at me, the Federal Clean Electricity and Vehicle Procurement Strategy. The US government is going to be switching over its entire fleet of vehicles to EVs. There's details for how this transition is going to happen. The plan shall aim to use all available procurement authorities to achieve or facilitate a carbon pollution-free electricity sector no later than 2035, clean and zero-emission vehicles for federal, state, local, and tribal government fleets, including vehicles of the US Postal Service. The plan shall also aim to ensure the United States retains union jobs integral, involved in running and maintaining clean and zero-emission fleets, while spurring the creation of union jobs in the manufacturer. They're going to be ensuring the future is made in all of America by all of America's workers. For the most part here, the White House's plan is to go for an all-EV fleet. They want the fleet to be made by American union workers, and the parts of the EVs have to be at least 50% manufactured in America. Any vehicle that the US government purchases has to have at least 50% of its components manufactured in America. There's a problem with this plan though. This is a Bloomberg article. I pulled it up on Yahoo because I'm paywalled on Bloomberg, but Biden's Buy America dream relies on buying EVs that no one makes. From the White House executive order, these have to be EVs made by union workers, and they have to have parts sourced in America. The only EV right now that's made by union workers is GM's Chevy Bolt, but roughly 3/4 of its components come from outside the US, missing the 50% threshold to be considered American-made under federal procurement law. And if you're wondering how big of a deal this is, we could see the US government has a fleet of 645,000 vehicles. Only 3,200 of them are electric as of right now. Less than a half of 1% of the vehicles are electric, and the government's going to be buying a crap ton more vehicles. Now, the government fleet is made of everything from small fuel-efficient cars to sedans to SUVs, trucks, vans. Everything is included in the 645,000 number. GM released this announcement 2 days after the White House executive order. They want to have an all-electric vehicle lineup by 2035. GM's firmer near-term goal is to launch 30 EVs by 2025. It's spending $27 billion in capital to make that happen and put everyone in an EV. GM is actually an umbrella automaker. It's made up of Buick, Chevy, Holden, Baojun, GMC, Vauxhall, Cadillac, and Opel. 2035, all EVs. Interesting. I actually am a firm believer in Ford, and if you guys remember a couple videos back, I made a purchase of 100 shares of Ford, and I mentioned it's an EV play. This Biden announcement works right into my thesis of Ford being an EV play, why I was buying Ford. I'm sure some people thought I was crazy. Oh, EV, why don't you just buy Tesla? Why don't you buy NIO? Look, America spends on American goods first, usually. Ford is an all-American company, and its fleet-grade vehicles are manufactured in the United States. Ford just launched the Mustang Mach-E, which is their electric vehicle, but it's not manufactured in the US, it's manufactured in Mexico. However, the Ford Transit, which is their van, is going to be electric by this year, and the Ford F-150 is going to be electric by next year. Ford to invest $100 million in Missouri plant to produce an all-electric van. The electric van will go on sale in late 2021, followed by the all-electric F-150 pickup in 2022. This is it. This is the Ford Transit. It's been produced since like 2014. It's going to be all EV by the end of this year. This article is back from September. Ford breaks ground on electric F-150 pickup truck plant in Michigan. The site will be up and running in time for the electric truck's mid-2022 debut. The Ford F-150 is the best-selling truck in America. This is also the most popular fleet truck for the government in America. You can verify that by going on any of the government vehicle auction websites, looking up trucks. The top-selling vehicle is always going to be the F-150s. They turn over very quickly. They are purchased frequently by the government, and they're sold in auctions frequently too. This bodes really well for the Ford EV, which, based on what I've read about it, it's got more torque, and the torque in an EV is instant, whereas for an internal combustion engine, you have to get to a certain power level in the engine to generate enough torque to pull something. That's why with a traditional vehicle, you hear the engine revving before the trailer starts moving, but with an EV, torque is instantaneous. This makes an F-150 EV like every truck owner's wet dream. I really do think that the US government is going to be spending heavily on the EV transit van that's available at the end of this year and the F-150 that's available next year. Now, just going with a shovel gold rush idea, if you don't want to invest in EVs to take advantage of this, you can also invest in charging stations. The largest EV charging station is ChargePoint, and they're actually going public. This is ChargePoint, formerly Coulomb Technologies. It's an electric vehicle infrastructure company based in California, operates the largest online network of independently owned EV charging stations in 14 countries, and it also makes the technology, so it has its own proprietary technology. ChargePoint is actually going public through a SPAC, and it's going to be merging with Switchback Energy Acquisition. When they merge, they are going to be sold under CHPT. That's going to be the ticker. Currently, the ticker is SBE. After the merger, it's going to be CHPT. The merger is proposed to happen on February 11th. So this is another way to take advantage of the EV play. I'm not really going to talk too much about ARK this week, but they did release an absolutely amazing resource. Even if you don't hold ARK, I'm going to post this link below the video. It is a 112-page PDF with their big ideas for 2021, and these are future industries. They included a lot of analytics, and you can kind of find anything that you're interested in for the future and see how the trends are going towards that. So this is a really, really fun read to figure out what's going to be big in the next 10 years. So this is their Big Ideas 2021. And if we go down to the table of contents, you could see deep learning, data center, virtual worlds, digital wallets, Bitcoin, EVs, automation, drones, aerospace, 3D printing, long read sequencing, multi-cancer screening, gene therapy. Start right here with deep learning. You know, we just had Palantir demo day. Part of the software for Palantir involves deep learning. This was really exciting to see. This was the first thing that they listed. Deep learning is creating the next generation of computing platforms. It's used for conversational computers. Alexa, play Despacito. Self-driving cars, consumer apps, requires boundless computational power, and it's creating a boom in AI chips. We'll come back to this in a moment. There's a really, really compelling piece in here on fintech also, overtaking the banks in annual revenue, so that's worth a read. But this one I thought was really great. The genomic toolkit is expanding to provide a fuller, richer, and more accurate view into biology. Oh, look at this. Look at this company mentioned right here. What is this? Optical mapping, bio-nanogenomics, BNGO. I was so excited when I saw this. ARK hasn't bought into BNGO yet, but just the fact that they're including this in their look ahead makes me feel really excited. I just mentioned that deep learning in there was the first thing that they were talking about. This is their ARK W Holdings next generation internet. Previously, Palantir was down here at the bottom of the list. It was like 52, but just in the last couple weeks, ARK has gone on an absolute buying spree on Palantir. It's moved up to 41. They have significantly increased their holdings in Palantir, which I think, especially since we just had the demo day, this is kind of like a vote of confidence in the company. I feel even more secure holding my hundreds of shares of Palantir after seeing this. One way to play the AI chips of the future is to go in on AMD. AMD, I feel like, is the most underrated microchip company. They just had their earnings report and it was absolutely killer. Their quarterly revenue of $3.24 billion is up 53% year over year. Their full year revenue is almost $10 billion, up 45%. Quarterly and full year net income more than doubled from the prior year. Their earnings per share went up like $1.30 year on year, and they went up $1.13 quarter on quarter. This company is just, this earnings report was absolutely amazing. Just gangbusters. Their adjusted EPS was 52 cents versus the 47 cents expected. That's a pretty big beat. They had strong demand for PC, gaming, and data center products due to the pandemic. Here's the AMD chart. You could see they just released their earnings and it spent the week tanking. So right now it's actually broken below this trend line and the share price for AMD is down around 85.64, which I'm not telling you to buy AMD, but this is a damn good buying opportunity. This company just reported its best quarter earnings report ever. The price has reset itself to levels at the end of November. This is an amazing buying opportunity for AMD. Another way to play the chipset is to go in on Intel. And I don't like this one as much, but some people are going to do this and I'm going to explain why I don't like this. Intel just announced a partnership with Habana, which is an Israeli AI chip firm, and this replaced their previous AI chip plans. The reason that I don't really love this, Intel share price, and there's many reasons for this, including the old CEO, has done basically nothing for the entire year. But just because it's only at $55 a share and AMD's share price is $85 a share, I don't want you to think that Intel is somehow cheaper. You got to remember, when you're comparing stocks, you have to look at the shares outstanding and the float. AMD here has 1.2 billion shares outstanding, 1.2 billion float. Intel has 4 billion shares outstanding and 4 billion float. That's, I can't do math, almost 4. So you have to figure that in here with their share price, and you realize that AMD is actually a massive bargain compared to Intel, and AMD is much more popular for the last year, so that bodes well for future success. The only thing that is going on Intel's side is that they have been working with AI chips for the last 3 years or so. Microsoft reported their earnings and it was amazing, and I finally got to see my Microsoft share price increase. I think it went all the way up to like 240 this week. Absolutely glorious. They beat their earnings. They killed their earnings. The estimate was $1.64. They reported $2.03 per share. My interest in Microsoft, it's not because of the Office software. It's not the operating system that goes on all the computers. Those are great, but those are known products. They're already on all the computers. There's not a lot of growth there. That's just a constant revenue stream. The reason I'm excited for Microsoft is because of Azure. Microsoft's Azure cloud revenue rose more than expected. Azure cloud revenue grew at a more rapid pace than forecast by analysts, up to 50% compared to the year ago quarter. So 50% year on year. That's absolutely mind-blowingly impressive. I'm so excited about this. How did Microsoft handle this? Well, it peaked up around 240 and then nosedive back down to 230. So this kind of could present another buying opportunity depending on, your level of confidence in Microsoft. I think out of all of the mega cap stocks, Microsoft has the most room for growth. And within 5-10 years, I would not be surprised to see Microsoft at $500 a share. Azure really does provide a lot of room for growth. Apple reported their earnings, also absolutely amazing. You could see they're sitting here at $132 a share. They were estimated to have $1.41 per share earnings. Their actual was $1.68. Big beat. Apple reports blowout quarter, booking more than $100 billion in revenue for the first time. That's amazing. $100 billion in revenue in a quarter. It's the first time Apple crossed the symbolic $100 billion mark in a single quarter, and sales were up 21% year on year. This makes you feel really good about your business model. Sales for every product category rose by double-digit percentage points. They didn't just go up a little bit, they went up double-digit. Peaked around earnings at about $144 a share, and we dropped down to $131 at this point. Apple is offering people another buying opportunity. With Microsoft, Apple, AMD, there's been these precipitous drop-offs after they all reported just amazing earnings reports. All of these companies that are reporting their earnings seem to be doing very, very well. I played an option on US Steel last week, and even they killed their earnings report, beat their earnings per share expectations. I feel like everybody's earnings are up, but the market's down, and that's because of the G word and the funds selling off their shares of everything else to close out their positions on the G word. So this is creating a buying opportunity for everybody else on their favorite stocks. Let's take a look at the upcoming week for earnings. This is basically the rest of the FANG stocks reporting this week. This is the second busiest earnings reporting week of the quarter. It'll be interesting to see Pfizer's with the vaccine. They should be reporting a lot of their vaccine sales. Alibaba, Amazon, Google. We've got PayPal up here. Clorox, if you remember, about a year ago now, Clorox, just their share price shot up when the pandemic started. Everybody wanted to buy bleach. Spotify just raised my membership price. I got an email about that. I am so mad. Spotify is raising my membership price. I am going to boycott them by still using their service. I love Spotify and I'm happy to pay the extra $3 per month. Down here, we've got Chipotle and Fireeye, and I do kind of want to talk about these two a little bit. Chipotle, because because straight up, I had no idea how much this was per share. So this is CMG, Chipotle Mexican Grill. They're coming in at a cool $1,480 a share. They've got a float of 27.66 million shares, market cap of 41 billion. I had no idea Chipotle was like this successful of a company. I guess because I haven't lived in the States in like 4.5 years, I didn't really understand apparently how common they must be, but this is what charging extra for guac gets you. And the other one I wanted to look at was Fireeye. This is a cybersecurity company. This is the company that got a lot of national attention back in December because they were the ones that alerted everybody of the Russian hack that was taking place. As soon as they alerted everybody of this hack, dropped off immediately. This is when they reported the hack. They lost $2, almost $2.50 per share. But then as the news got out that they actually were the ones that uncovered it, and as the media and everybody realized, oh wait, no, this is a good thing that they identified it first, their share price just ended up just skyrocketing. It went up almost $10 a share. Since then, it's been kind of just in this little channel, slowly losing value. I feel like if they beat their earnings, and there's a chance that they will, you could see their revenue, their earnings here. This is a very financially healthy company here. You could see they've massively beat on their earnings reports. Just a couple days ago, the Microsoft CEO, Satya Nadella, said there's a big crisis right now in cybersecurity. Fireeye was one of the companies that identified the hack that affected Microsoft and other companies. I'm hoping that if they beat their earnings, then their share price kind of gets out of this little slump and they end up moving to the upside again. I don't really know much about their cybersecurity product, but the way that they ethically handled the hack situation, immediately making all information public on GitHub so everybody could protect themselves, I thought it was morally correct. They knew it was going to affect their share price, but they wanted to get the information out as soon as it happened. SolarWinds, oh, that's the other end of the story, and they're not doing so hot. Now, this is a company that I'm kind of like looking ahead to for next week's earnings, Corsair Gaming. Corsair is a manufacturer of peripherals, keyboards, mice, headsets, controllers, capture cards, studio accessories, and more. They just went public, and they've only had one public earnings report to this point. They were expecting 28 cents per share. They reported 54 cents per share. Basically, since that earnings report, Corsair has just been climbing in value. This was after the earnings report. You know, they ended up going up mid-20s, peaked up over 50, you know, doubled in value. And then it's just kind of been bouncing around between 42 and 35 since that point. I think that Corsair has a really, really strong chance of making another strong move to the upside after a good earnings report in 2 weeks. This is a position that I'm actually strongly considering opening up. On top of that, I really do like their peripherals. So that's another solid reason to invest in a company. The last thing I want to do today is talk about what happened with Robinhood. And I'm going to do this without saying the G word. Robinhood blocked purchases completely on Thursday on several high volume stocks that were of high interest in the trading community. And this enraged a lot of people because they only enabled selling, and the price underwent a short ladder attack on one of these G word stocks and drove the price down, and people were just watching it thinking that it was a massive sell-off and there was a panic. And you can see here that Robinhood is basically saying that they were required to do this because they had to meet clearinghouse requirements. They had to stop people from buying them. We did this because the required amount we had to deposit with the clearinghouse was so large, with individual volatile securities accounting for hundreds of millions of dollars in deposit requirements, that we had to take steps to limit buying in those volatile securities to ensure we could comfortably meet our requirements. This doesn't sit well with me. This doesn't sit well with anybody. The Robinhood CEO made the rounds on mainstream media. It just felt really sleazy. It felt like he was lying. He was dodging questions, and nobody that I know that saw those interviews was satisfied with his answers. To be clear, Robinhood was not the only platform that did this. Many trading platforms did this, including Webull, which is another platform that I use, and I'm in their influencer program. But the Webull CEO got on air and explained it clearly, and he explained that their clearinghouse, Apex, ordered them to do this. They did not have a choice. So the Webull CEO was completely transparent. The Robinhood CEO was a little dodgy, saying there was no liquidity problems, blah, blah, blah. Also, something that is very concerning is the series of coincidences. The hedge fund that was short on the G word was Melvin Capital. Melvin Capital got a bailout, almost $3 billion from Point72 and Citadel. Citadel is who Robinhood sells order flow data to. Citadel has has a vested interest in Robinhood. Citadel had a vested interest in Melvin. And miraculously, it was reported that Citadel was able to get out of its position during that time when nobody was able to make purchases on Robinhood. I don't think they were able to close out positions, but this is still really sus. Robinhood set limits to increasing your existing positions. Now, for example, these are aggregate limits for each security, not per order, and they include shares or option contracts that you already hold. The first one on the list, AAL. You're only allowed to hold one share if you have none to start with. If you have 100, you can keep your 100, but you're not allowed to buy any more because that's greater than one. Options, 10. The reason that people got really upset was right here and right here. Also, this is the one that really pissed me off. This isn't like a list of meme stocks. I mean, here's Rocket Mortgage, which I believe is one of the greatest financial companies in America to invest in right now. It is a fintech company with an amazing app. They process more mortgages per month than any other mortgage operator in America, and they do it with no brick and mortar locations and fewer employees. Each employee in their company processes 8 times the number of mortgages as any other mortgage lender in America. This is an efficient, profitable company. I love buying this stock. Every week when I make my money doing my theta wheel strategies on my other stops, I go around and I turn and I buy extra shares of Rocket. Rocket is another one of those companies that's had a lot of short interest, and I knew this, and I knew that eventually when the shorts kind of let up, the price is going to spike. But suddenly on Robinhood, I cannot buy greater than 1 share of Rocket, and I already have somewhere around 150, but I'm not allowed to purchase any more. So bye-bye Robinhood. What does this mean? This means I'm actually not going to be showing you guys any trades this week because I am going to be waiting for this whole G situation to finish, and then I'm off Robinhood. I'm going to be transferring my entire account to Webull. I have already started initiating funding into Webull so that I can make some more purchases next week, probably including Corsair. This is really how I think they feel about us. So there you have it, guys. I managed to cover the news without saying the G word. Yeah, got it. Nailed it. There's no DD video coming this week, but I promise I'm going to get you guys one next week. I already know which company I'm going to be doing, but I'm not telling you. I want you guys to know what to expect. I firmly believe there's going to be a broader market sell-off most of this week as the funds unload their other equities to pay for the short coverage. This means your favorite stocks are going to be on sale. And something else that's very important to note, a lot of the small cap stocks that I've already made my videos on, like Check, Sens, SLRX, probably not Bionanogenomics at this point, but the small cap ones are going to be most impacted by this. Small cap stocks, a lot of them are typically the first ones that get dumped because it's kind of easy money to recover from. So don't be surprised if you're looking at your portfolio this week and you see your small caps just losing a ton of value. If you believe in them, use this opportunity to buy more shares. It's a fire sale all week, maybe even into next week. We don't really know. I am expecting the market to be going down this week. As always, hope you guys enjoyed the content. If you did, please make sure you like the video, subscribe to the channel, and if you want to be alerted to my content as soon as it goes live, hit that notification bell. If you'd be so kind, please give Webull a little bit of love for the transparency in their CEO. Just a reminder, I am partnered with them. They did put me in their influencer program. My referral link is going to be below the video. Fund your account with $100. You get some free stock. I get some free stock. Everybody wins. All right, guys, I'll see you next week. Thanks for stopping by.